Hi guys, welcome to the post-market analysis. So this is 11th of December, crazy volatile day. So we were looking for a gap up of 100 points. We didn't get that. And then it was opening flat. And then there was a sharp fall, right? In fact, there was a bounce from yesterday's low, which gave a 50-point bounce. So then we decided when we were thinking that it may go further higher as per our expectation. But then there was a sharper fall. That too, once they have crossed 20 MA, we were expecting that you'll be getting a very good up move. Simply they have broken and you got a bigger candle and it even broke 25,700 at one point. So that's very significant. And from there, you have that Camera 3 also. They bounce back, right? So it's like you have seen that, 4 days of continuous fall. Continuation of that we have seen in the opening. But then there is a sharp bounce. There is a sudden green candle, which we have seen. And the entire fall of yesterday and today has got wiped out in one single day. So again, you will see, this is a pattern, right? 2-3 days you are coming down. Previously, I think 5 days red candles and then you got a green candle. Now three days red candle and 3 days fall and then you're getting a green candle. So exactly the same thing as what we are actually seeing, 3 consecutive down sessions. And now it's a huge green candle. That's mainly because of the short covering. We expected a short covering, in fact, yesterday because of Fed meeting, announcement of interest policy, but that didn't happen because of the huge negativity which was prevailing. And we were expecting the rate cut, and that was not going to make much impact. We were expecting a hawkish commentary. That is why market didn't go for a short covering yesterday. Otherwise, because of the rate cut, it could have gone for it. Then what happened? Instead of hawkish commentary, which was expected by the market, the Fed chairman have actually given a positive commentary. So the market today went for a short covering, but it trapped many people. It even broke yesterday's low. So many would have entered on the downside. What the moment you have seen it is breaking yesterday's low, and you got a big candle close and breaking 700 also, then reversed. So there are quality stocks also now getting corrected, and this is a scenario that you are seeing, right? So I hope this is very clear. Apart from that, the US market fell sharply today, the futures, because of the Oracle results were weak, and US futures have dropped, and the Indian markets, in fact, opened flat and then initially got sold into and then recovered. Pre-market, I've told you what has actually happened in the US market yesterday. Infosys was green, TCS was red, HDFC was green, ICICI was red. So, IT stock, in fact, should have gone up because Nasdaq was up yesterday. And if you look at the ADRs also, it was very good positive. So, but still, that was a scenario. Now, again, this something which created panic at least for 5 minutes when they have broken the 25,700 level. But once they broke that, then came the bounce and then a sudden short covering, right? So what we have seen the high of 26,300 and then now 25,700 also. So almost 600 point have come down, right? From here now it is closing at 25,900, which is 200 point up from the top. So this is a present scenario now. So that's a short covering. And towards the end, some good long buildup is also coming. And tomorrow and the next days will tell what is actually going to happen. Anyway, liquidity is not an issue at this point of time because of this bond purchase option. At the same time, repo rate, by RBI and also Fed interest rate cut also. But liquidity is not the problem. Domestic liquidity is also there, and international liquidity is now also there. But FIIs are not interested because of rupee depreciation. That's another issue, right? So short covering, you have seen the 200-point jump and then again fall of 100 point, then again recovered, went to the top. I think yesterday's top high level, then came down, then again went to that level, made a double top and came down and closed almost at the high, which is 25,900 level. In fact, it's a gamma-driven, liquidity-driven volatility, especially this scenario is dangerous for the short-term traders. Long-term, we know despite all these, volatility where the market is heading to. But for short-term traders, their stop loss keep getting hit because of this volatile move, 600 point, 500 point, like that kind of moves, right? Now, it's a strong fight between bulls and bears. Bears were very active in the last 3 days. Now today, once the movement started, what happened is all these bears started running for the cover. So there is a short covering, and that's exactly what happened. If you look at the pre-market analysis, I've clearly told you bears are stronger and call open interest is higher. So there could be a short covering which need to come today, and that's exactly what happened. So all these are discussed in the pre-market. You can go through that and you'll get the logic, because post-market, post-mortem, instead of that, we have predicted this is what going to happen in the pre-market. So that if you have watched, that will be giving much better idea. See, when you see this kind of high volatility, a bottoming out process, what is it actually signaling, or what is this actually meaning? It could be a bottoming out process because the liquidity is coming, volatility is coming, or it could be a topping out process. So, or it could be a long-term consolidation phase. So from October onwards, if you see, till this last 3 months, it came to 26,000, right? And then gone below. Or if you take from the all-time high, which was hit on September 2024, September 2024, now December 2025. So all-time high hit was 26,275, went till 21,700, almost close to 20% correction, then went up to 26,000, came down 25,700, broke the all-time high 25,300 it came, and now again correcting 25,700. So there is a huge swing that you're actually seeing. But after, even after making that all-time high in September 2024, it's 15 months close to, but still it's there only. So Nifty have not given any returns, technically speaking, from last 15 months. And it's kind of sideways consolidation, but with massive volatility. So short-term traders, you go on the upside, it will be taken out. You go on the downside, that also will be taken out. So this is how it is actually happening in the market. Now, if you look at the option chain data, heavy call option selling again at 26,000 strike, which you can see that could be an immediate resistance. So tomorrow, if that is crossed, again, they'll go to that all-time high level. Heavy put writing is there at 25,800 now. Because they have crossed that level, which is very important, 700 also. And 25,700 could be a very good support. As of now, it looks like, because it's close to 2 times it get protected. Last to last day, 25,720 it came. Today it came to 700. So it's a kind of double bottom and you got a big rally. So I think, and in fact, at that level, there was a gap also. So that gap actually filled on the last day. So that's going to be a very good support also. So this is a pattern which you can see over the last 1 month or last 15, 20 days. 3-4 days, you're getting red candles. I think before it was 5 days, then a big recovery candle. Same pattern is what we have seen. Last 3 days coming down and now a recovery. Now there are 12 more trading sessions in this series. So could be this. Let's see what is actually going to happen. Before the new year, if we go and touch that 27,000 mark, it is great. But FIAs are in a selling mode. Normally in December, they used to sell. So here the selling is more because rupee keep on getting weakening, right? Asia's weakest currency at this point of time, and it keep on making all-time low also. So if today's low is not broken again in this series, I'm looking for a higher side. So let's see if 25,700 is broken, then 25,500, that level is possible. So in fact, it was a violent whipsaw move today. Both sides we have seen very sharp, big down move. Why that created problem? Because that's never expected. So once you never expect that and you get that, that's the big problem. And broke that 25,700, recovered sharply, and a sharp short covering mid cap and small caps. If you see, they were remaining extremely volatile, right? And many option writers, they are covering and they were forced to unwind also. Margin calls are coming here and there, and market has remained confusing even now. So US market is good, but again, liquidity is there, but India specific still problems are there. The trade deal is not yet cleared. The discussion is still going on. There is no clarity. EU deal is also on the radar. So all these are again not yet covered. So let's see what is going to happen in future. This is what I need to discuss. So see you in the next video. If you're looking for any live market mentorship, get in touch with us. I see you there.